If you're running an established, profitable business, you already know the math. Losing 25 to 35% of your profit to taxes acts like a massive anchor, slowing down your ability to scale and build wealth. That math is why a specific jurisdiction in Malaysia, Labuan, gets so much attention. Set up a company here, and you are looking at a legal tax rate of either 3% or 0%, with zero taxes on dividends, plus the ability to move your entire family overseas. But those numbers usually trigger an immediate red flag. It sounds like an outdated, flimsy shell company scheme you'd hear about on a late-night infomercial. This chart plots global tax jurisdictions by effort required and tax impact. Labuan sits way up here in the top right. It requires legitimate operational substance, which separates it completely from zero-effort Caribbean tax havens. Accessing near-zero tax rates in a compliant way means you have to commit real capital to build a rigorous corporate structure. There is no overnight shortcut. Take a look at this bar chart comparing macroeconomic growth. While major Western economies are stagnating, Malaysia is posting a 5.4. If your entity exists purely to manage investments, hold stocks, or own real estate, your tax rate drops to exactly 0%. You have to keep these streams completely separate. If you blend active trading revenue into a 0% holding company, you violate the structure and immediately lose your tax-exempt status. If you maintain that separation, both structures provide the same baseline exemptions: zero sales tax, zero service tax, and zero stamp duty on your business documents. Securing these rates starts with taking a hard look at your revenue streams and defining exactly how your money is made before you file a single piece of paper. Here is the primary trade-off. You cannot just rent a P.O. box. To qualify for these rates, you must lease a physical office in Labuan and hire full-time local staff. This map shows Malaysia's network of over 70 double taxation treaties. That required physical office is what guarantees your business is fully OECD compliant, providing a legal shield against double taxation across 70-plus countries. Mandatory rent and local salaries create a fixed operational overhead. That bill comes due every month, regardless of how well your business is performing. If your total company revenue is too low, the cost of staffing and maintaining that Labuan office will completely erase any money you save on taxes. This Gantt chart breaks down the 10 to 12-week timeline required to build the entity and process visas. It is a slow, methodical progression. The first month is heavily bureaucratic. You will face strict Know Your Customer audits, detailed business plan reviews, and document translations. The reward for clearing that friction is access to Tier 1 international banks, like Maybank or CIMB. You get multi-currency accounts in USD, euros, or pounds, with zero forced conversion into the local ringgit. You are legally required to navigate this maze using a licensed local trust company. You cannot file the paperwork yourself. With a Labuan setup, you are deliberately trading speed and convenience for strict global compliance and rock-solid financial stability. Once the corporate entity is live, the primary founder receives a 2-year, renewable, multiple-entry work visa. This family tree illustrates the dependent pass system. That single corporate visa extends legal residency rights down to your spouse, children under 18, and even your senior parents. Here is the crucial geographic advantage. While your business office must remain in Labuan, your family is legally free to live, work, and attend international schools anywhere in Malaysia, including Kuala Lumpur. You will manage your staff remotely, and you will need to travel domestically to Labuan occasionally for official passport stamping, but your day-to-day life happens wherever you choose. For most founders, the Labuan entity serves a dual purpose: a lean tax structure and a comprehensive residency plan for the entire family. Let's map if this strategy fits your situation. Business revenue against your desire to relocate your family. If you run a low-revenue startup, avoid Labuan. Compliance overhead will eclipse tax savings. But established operators generating high revenue, wanting to relocate abroad, sit right here. Labuan is an incredibly high-yield play, but the math only makes sense if you have the established capital to fund the rigorous compliance upfront. Executing this strategy requires a specialized facilitator. Attempting to navigate local trust mandates and visa applications on your own risks catastrophic compliance failures. Global Bridge Educational Consultants, or GBEC, is the mandated licensed trust partner you need to build this structure correctly. They handle the 12-week KYC audits, execute the strict trust mandates, secure your banking introductions, and process multi-generational family visas. You can initiate the process today. Call 011-1663-5590. Visit gbeconsultants.com or schedule a meeting at their office in Sri Petaling, Kuala Lumpur. Securing a 3% tax sanctuary and permanent residency for your family requires precision. Take the first step with a trusted partner today.